Happy Tuesday there, Trading Mavericks. This is Rob Reinhold. This is the Market Roundup. Let's go ahead and jump right into this. In this session, we're going to go through the news of the day. We're going to take a look at the broad markets. Then we're going to boil it down and look at the sectors. And then we're going to go through some trading opportunities. I've got 2 shorts and 1 long for you today.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
All right, so today the market was down. Big down day across the board. And you can see the Dow was down 0.5%, the S&P down 1.1%, but look at the Qs, the NASDAQ dropping almost 2%. At one point, I think the low was 2.2%. We had a little tiny bounce at the end. Russell outperforming. Remember, we talked about the January effect. The January effect is the only time where the worst stocks of last year outperform the best stocks of last year. That doesn't mean that the best stocks go down. It just means that that is the case. So it's not a surprise here that the Qs were down big and the Russell was not down nearly as much. Now look, this is one day. We can't look too much into it, but we're definitely going to be looking further underneath all of these numbers. As you can see, the oil and gold markets were up for the day. So commodities getting a little bounce. The XLB, the commodity sector, had a nice little bounce today when the market was down. The big news of the morning, we had CES. Now, if you don't know what CES is, this is the Consumer Electronics Show in Las Vegas. It's a huge deal, and usually these companies that are dealing in technology, they use this as a platform to announce new products, to announce new numbers. And we heard from Jensen Huang, the CEO of NVIDIA, came out, basically said the future's bright. So NVIDIA was gapping up to all-time highs this morning. Everyone was very excited about technology. And then we get to see what happens most of the time. Buy the rumor, sell the news. When the news finally came out, tech stocks turned south and basically sold off all day long. So NVIDIA went from an all-time high to down over 6% for the day. As far as economic news goes, we got services PMI, and it had a really nice jump. So let's take a look at what happened today. So we had overall good news. We had services PMI much stronger than expected. We had NVIDIA and everyone showing off their new products. That really doesn't matter. But overall, we had positive news and the market still sold off. Now, I always like to use this as a great time to look at the markets, because when the market has good news and it goes down, what it's telling you is that everything was already priced in. It was the buy the rumor, sell the news. Let's take a look at where we are on this chart. And I talked about this last weekend in the trading room. I said, look, we're in no man's land. We made an all-time high up here, and then we crashed and went down below the 50-day moving average, popped back up, put in a low here, and then came in here and bounced off the support point. So look, we have clear support in the 58.30 to 58.60 area. That is clear support. But we also now have this lowering trend line. And remember, on the trading room, I said this was a pretty impressive candle Friday. I would not be surprised if we had a little bit more bullishness in us before we met that resistance line. And we hit that resistance line, and you can see we're stuck. Nothing has changed. I had us at a 0 over the weekend on the trading room. And guess what? We're at a 0 here. Now remember, a 0 doesn't mean flat, sideways, listless price action. 0 can be a stop from +3 to -3. We don't know yet. And if you remember, I put a call. I said, I've got a 60-40 odds in my brain that we actually break lower here. It looks like this is starting to look even more bearish here as we now have lower highs and we're just holding on to the support level. I'm going to go ahead and bump this up to maybe a 65% chance, 70% chance that that is the next level we break instead of breaking to the upside. Now look, I have to be flexible as a trader. If it does break out to the upside, I have to say I was wrong and I need to go ahead and get back on the bullish train. But until that happens, zero neutral is the place to be here, but I'm definitely looking for more shorts than longs here in my trade setups. We come over here to the Qs, we see virtually the same pattern. Same pattern here. We came down, we bounced, we have lower highs here. Likely to break lower. If we do break lower, maybe the next level of support is down here at 498 on the Qs. That's about 16 points. So that's roughly about 3.5%. So I'm looking at a possible 3% downside from here before we hit our next major support. If we take a look at the heat map, you can see all the big red in big cap tech. But I want to take a look just at the bottom section of this. Down here, we actually find some strength. There's a little bit of strength in financials, a little bit of strength in healthcare, a lot of strength in energy, and those basic materials had a little bounce. Utilities had a little move up. The big question is this going to continue? Are large cap tech going to continue to sell off? My premise is that it does continue to sell off. And so those are such a big part of the market. Remember, the Mag 7 is now 31% of the S&P 500. Whatever happens to these is going to move the S&P lower. However, there's stuff under the surface outside of these big cap tech stocks where I'm going to say it's more mixed underneath. Now, this is the exact opposite of what we saw in December, where the big cap tech stocks kept going up, and everything underneath was very mixed and very muddy. Now we get these big pullbacks. I actually think there's going to be some decent price action in the right sectors on the long side while the rest of the market pulls back. Overall, I was at a negative 0.5 on the trader room, and I haven't budged. I'm still there. If you want to call it a -1, I said that's fine. It's technically a -1. I'm just not ready to go bearish until I get a confirmation of a break below 58.40, 58.30. That's going to be the point where now it is confirmed a downtrend. Let's go ahead and look at a couple potential trades here. Before I jump into the one that I want to show you, I just want to point out three stocks here. CRK, YPF, and AR. These are all in the energy sector. The energy sector looks fantastic here. It looks fantastic. Outside of that, there's sporadic, strong things like GameStop looks good here. Boeing actually looks decent here. So there are some things that are moving, but I don't see anything really as far as a big sector push other than energy. I think energy is the only clear bullish sector at the moment. I think everything else looks pretty bearish to neutral. So let's go ahead and take a look at one of those energy stocks, and this is AR, Antero Resources. And between all of them that I picked this one because if you go further back in a chart, which we don't have here, but if you go further back in a chart, there was some long-term resistance at 36. We came up, we spent about 5 days here, and then we broke out today. That's a nice breakout to the upside. The big question is, where's the target here? I'm just going to draw a 45-degree line off this last high since we had this pretty long base here. And I'm looking at maybe somewhere around a 40. Here's the great thing about trading. Just because my target is 40, that doesn't mean that's where I have to play my trade. With options, I can do anything I want. This stock has weekly options, so I could do a 1-week option. I could do a 36-37 bull call spread. Now that's going to be theta positive. That's going to be, sideways to higher. If you want to go a little bit more bullish, then again, like a 37-38. 37-38, give yourself 2 to 3 weeks. I like that trade. If you want to get ultra aggressive, you can go all the way up to 40, like with either a 36-40 bull spread or a 37-40 bull spread. Like I said, energy is the only sector I think is a clear buy to the upside. Moving to the downside. This is one of the worst looking charts I've seen out there. This is Dow Chemical. Now, we have been in a bull market for a while, and Dow Chemical has not. And look at this price action. This is terrible price action. Even with the strength today in the sector, Dow Chemical was down for the day. So this is telling me, okay, I like this one to the short side. There's a lot of ways you can play this. Remember, you don't have to be playing delta all the time. You don't have to say, I think this thing's going to fall all the way down to 37, which again would be about my target. You could do something like a 39.40 bear call spread. You're going to get in about 40, 45 cents, have 55 cents of risk. If it goes sideways or lower, you're going to be profitable. Again, it's a bidirectional trade here. If you want to get a little directional, I think a 40-38 put spread makes a lot of sense. You're going to be paying about 40% of the spread, so you got a 1.5 to 1 risk-reward ratio. If you want to get more aggressive, then again, down to 36 or 37. Somewhere in here would be the target. But Dow Chemical definitely looks weak. And then next, this is in the technology software area. This is Zeta. You can see big fall off of earnings. Huge volume. It bounced up. It came back down. It lost its way. And you can see now we're just breaking down. And look at this last one. We came down. We hit this support. Look at this lethargic rally off of that low. Today we got our confirmation candle. You can play this one of two ways. You can say, you know what, I don't think it's going to break yet. I think it's just going to hang out and be weak. That's fine. It closed at $18. You could do an 18-19 spread. You could do an 18-19. Again, this is a really wimpy trade. And basically, if it just doesn't go up, if it stays here, you're profitable. You could go down to 17, say, okay, I'm going to do a 17-18 spread. Now you're getting a little bit more directional. You're probably going to, again, pay 30 cents of a $1 spread. So that means you've got 70 cents of upside. That's more than a 2-to-1 risk-reward ratio. Or you can get ultra bearish and say, I think this is going to break. And if that's the case, you could do a really wide spread, like all the way down to a 15-19 spread. Or you could just do long puts. I think long puts here make some sense. We've got a market that's teetering. We got, again, a technology sector that's teetering. These are the times I don't do long calls and puts often, but this is one of those times where I think it makes a little bit of sense to get really aggressive on delta on the longer short side. This one on the short side. Let's talk about tomorrow. After a big red or green candle, so again, we had a big red candle today. Whenever we see this expanded range candle, the most likely candle is a Harami, which happens in the bottom half. On a bullish move, you typically get a candle that looks something like that. That's probably the most likely thing we get. We do have a Friday employment report, and we have the markets closed on Thursday in observance to President Jimmy Carter's memorial. I just think this is setting up for tomorrow being a Harami candle. And then again, the Harami is, you get the big move, you get the Harami candle, and typically you either get this or this. You get one of the moves off of the Harami. Most of the time it is to the side of the expanded range candle, but sometimes they are to the upside. This is all setting up perfect. This is all setting up perfect for tomorrow. People not wanting to take a position into the last day they can take a position into the Friday employment report. I think we see a candle tomorrow that's in the bottom half or bottom third of today's candle. It could be red, it could be green. I just don't think it's going to be that big of a day. And then Friday, we do have the employment report. Tomorrow, we do have the ADP employment report and FOMC minutes. Those are going to be movers a little bit, but I think people are going to be waiting for that employment report on Friday. That is it for the Market Roundup. Thanks for joining me. Goodbye, everybody.